the point you raised about lens to be so interesting because on one hand, you have these VCs and angel investors like Jason Calacanis. I heard your interview with him and he said, some of the companies I passed on appeared on Republic. And you said, yeah, some companies we have, Sequoia would never allow. But then your acceptance rate is already so low at less than 3%. So how does your lens really differ from that of traditional VCs and angel investors when they also focus very much on the founder and who they are?
Yes, at a slight risk of upsetting our VC partners, the Sequoia, the Jason Calacanis of the world are demonstrated expert in picking successful companies. And even their lens also evolved with time. I probably only know the more basic aspects of how they look at deals. But society is changing and it's changing very, very rapidly. The question here is one person, whether it's Jason or Andreessen or myself, not to say that I'm in anywhere near in that bucket, I am not. I'm just saying that is there one individual can possibly have all the lens on what is next, what is talented, what has full potential. One person can see a lot, but still a sliver of the whole picture. So Jason, just seeing one lens, and his view is already very broad in terms of how innovative and how forward-thinking has always been. He cares about diversity more than any VC that I know. But one human lens is enough for him to become a multi-billionaire because it's such a large intersection. But what about everyone else outside of that lens? So we want to make sure that Republic leaves that decision some to the general public. That is, if there's a company that fails my lens, but receive the interest and backing of, say, 1,000 Malaysian and Malaysian Americans, because I don't know anything about Malaysia as a market. And since I don't know enough about the people to know that this is a particularly strong and powerful person and committed based on this cultural narrative, but clearly there are enough people out there who believe in her. Who am I to say that you're not a fit? I gotta make it open so that the founder can receive money from the people who believe in her. So we call it the wisdom of the crowd compared to the wisdom of one. And the wisdom of one is necessary in the early phase for credibility, for many things. But what we do at Republic is very different from VC, is that we aim down the road that is a much more democratic process in deciding who is valid and who is not. Right now, it is still the Jason and the Andreessen and the Sequoia of the world as the number one signal. But every single passing day, the power of the crowd and the wisdom of the crowd etch its way into this sandbox to build.
And was the wisdom of the crowd what led you to accept, and I found this very intriguing, a 12-year-old founder of Quarters, a gaming currency, to raise on Republic?
I worked for, before AngelList, for the founder of Sky Vodka. It's a vodka brand in the US. And he founded Sky when he was 77 years old. And he sold it 6 years later for $600 million to another company. The lesson working for him was that you can never be too old to be a founder, to build new things. 77 years old. Then the reverse got to be true as well, which is you can never be too young to be an entrepreneur. Now, of course, you're handicapped by a few things. Like if you're not 18, you can't really sign a contract. You can't even have a bank account. So you need people around you, like guardians, parents or whatnot. So of course, this founder of Quarters has a unique background. His father was very involved and is an experienced entrepreneur and venture capitalist. But the idea, and he at one point may still be the most knowledgeable person about crypto who's still a teenager or preteen. But yes, I think the narrative there is that possibilities are not handicapped by time, by age, by any state in life, for as long as you have a breath in your body and you want to pursue possibilities instead of security. Anyone and everyone can do that. But yes, it is indeed about, in some way, the wisdom of the crowd is a manifestation of more possibilities than just venture capital.
So what I found intriguing as well is that you don't just research and look into a potential company from afar. You, at least at the very start, you were very involved. When you first launched your first 4 campaigns, you spent 40 hours of your own time just spending it with all the founders, helping them with their pitch decks. Share a bit about that period and what you were, learning from then.
I can't believe it's 5 years ago already, but when we first launched a platform, it's brand new. Founders didn't know about it. There was no investors. So you got to convince people to right now, if someone go and launch a campaign on Republic, we have over 1 million community members. Out of that, hundreds of thousands are active investors. So if your company is compelling, you're going to be able to see a lot of people are going to see the page and they may make the decision to invest. On day one, I don't know, we had maybe 10 investors on the platform. So the company got to go out there and pitch and talk to their friends and help raise and close it. And so the four companies that we launched with in 2016 that believed in what we did ended up becoming close friends because their success was our success. Their failure would mean our failure as well. And so we were like partners in crime even more closely than the companies that launched in recent months or years. And just pounding the pavement and sharing the experience and the privilege of building something new together.
How were you building that deal flow, if you will, for yourself? Because as you mentioned, your first year was 4 companies, you raised just over $500,000. 2020, it's 128 companies, 42 million. This year, already 67 companies, 28 million raised. So that is a huge jump. So how are you getting all these companies on?
Yeah, this year by now, we actually have done, I think, well more than 100 million. And we aim to do more than 600 millions by the end of 2021, projected. We'll see. The pace of the industry grows like a snowball. They call it the snowballing effect. As it falls and rolls down, it rolls faster and bigger and faster and bigger. So at the beginning, to push it off the ledge, all hands on deck. I mean, 18 hours a day, sometimes 22 hours a day. And there's no such thing as vacation, but you don't need one because it's so exciting and hard. And so it's kind of like all in effort all the time. But it's about finding like-minded partners who can amplify you. And I think that in life, whether it's in human relationship, family, or certainly building a company, it's about finding partners and advisors and teammates that amplifying and not frictional. What I meant by that is that when I didn't have that network, and not just AngelList, but Techstars and other people who believed in what we did, share the message, and slowly people came. I didn't know how to do community building. So one of my good friends, the founder of the Malala Fund, her work got Malala the Nobel Peace Prize the age of 16, I think, lended us her expertise on community building, on mission statement. All of these things, large and small, come together to push that snowball off the ledge at the very beginning. But the only reason why we were able to do that was that we had a very authentic and a genuine mission that is larger than I want to build a company to make money and be special. That was never the goal. That is not the goal. And I don't think that should be anyone's goal to do anything. We all are special in our own way. And no, you don't need nearly as much money. It's easier for me to say sitting in the United States, I understand, than many people in Malaysia or Vietnam. But particularly those who are listening and who have a laptop and a smartphone, just know that you already have such a strong foundation that you should pursue what makes you happy rather than just money. And I think our mission of making a difference, of changing the status quo so that more founders and more investors can have access, really resonate with a lot of people and resonated early on in that we had the support that we couldn't have done without.
It sounds very much as though at this point in time, correct me if I'm wrong, VCs no longer see you as competition. How would you explain to someone coming to you and asking a question, why we raise funds with you and not VCs?
The optics about it being competitive is just not true. One, because exactly like you asked, the value added from our model of investing is so different. When Jason invests or when Sequoia invests, they bring an insane expertise and they can open doors in terms of introduction, partnerships that unparalleled. When people, community invest, they bring the brand loyalty, the engagement. I'm drinking some tea brand this morning. It's called Yogi, Yogi. I'm not an investor in Yogi, and so I buy Yogi, but I'm sure the next cup may very well be from Starbucks. Had Yogi presented itself so that I'm a $500 or $100 investor in Yogi, Ling, I may probably sending it to you as a Christmas present. When my mom comes over, I'm going to serve her Yogi tea and say, hey, I'm an investor in this tea brand. Just psychologically, you want to be connected. And once you're connected, you're going to talk about it and you're going to share in that success. So the value add for us is branding and marketing. And the value add for traditional VC is more on the professional expertise of one or two individuals who can open lots of doors at once. We are even additive to VC in that we are hoping through wisdom of the crowd, identify talents, identify companies that otherwise would not get any financing, finance them and feed them back to VC when they're large enough. So I think Republic and our business model is very additive, feeding into the whole ecosystem and not in any way competitive with any one component of the startup financing ecosystem.
So you mentioned the Republic business model. Could you share a bit about what that is?
Well, our business model at the end of the day, we're an investment platform that aim to be the one-stop shop for anyone around the world to come to, whether with $20 or $2 million, that they can see things they're passionate about, that they believe in and invest, whether it's residential real estate, whether it's a new technology like blockchain, whether it's a gaming company and get some revenue share, or a company that's very early stage in Silicon Valley, or SpaceX and Robinhood. At one point, we had SpaceX on the platform and was the only place that you don't have to have $400 million to invest to participate. And it was sometime last year. But it meant to be the place where people combine their interest with making profit down the road. And we take a revenue, a fee from the company on the amount raised, and we have a little bit of an upside potential in everything that we touch.
So that's like 6% cash and 2% of securities.
It varies. It depends on the type of companies and the industry. It can range from like 2% to 6%. And we have a little bit of an upside interest that also varies depending on the type of deal.
And I believe you're the only one of the top 3 funding portals that doesn't charge investors anything. Is that likely to change?
Probably not anytime soon, because we believe that it's still early enough that we want to make sure that investors get the most out of the capital that they deploy. But like I said, the industry changes is so new, and so changes are all but expected. For now, we still believe very much that leaving the most in investors' hand in terms of capital deploy is the way to go. And I doubt that this is going to change in the coming months.
So we probably also wouldn't see a shift to like a lead investor structure the way WeFunder has done as well.
You may see some notion of lead investor that we already have. We have Randy Zuckerberg, former Facebook marketing head, and millionaire. We have Kevin Harrington, one of the leading shark or the original shark investing. So yes, there are going to be new iteration and models being rolled out, but everything that you see right now changed all but expected.
So I would love to talk about your actual campaigns. What, from your experience, have you noticed are the hallmarks of successful campaigns?
I think it still goes back to companies, either that they already have a very strong community. Those are the most successful ones. If you are already a brand with 1 million or 500,000 users, and you just want to give your users the ability to become shareholders, and increasingly you're going to see that being a thing. If that's the case, then the campaign will close very quickly. Now, on the other side, if you're a new company, then having a narrative, a storyline that is special, that can speak to people at home who spend a couple minutes watching a video or listening to you or reading the deal page, that ability to convey passion and potential is key. But the third metric, particularly for the cohort of newer companies, the ability and the willingness in the team to go out there and activate and talk to people. People think that they just launch a campaign and money comes in. Oh, that's not how it works, right? If you're building a business and you don't have the confidence to talk to your sister, to your cousin, your ex-boyfriend or girlfriend, your neighbors about how special this is, why do you expect that someone on the other side of the world would just be like, oh, she's amazing, let's invest? No, you gotta show that those who are closest to you believe in you first. So it does take some time. And I think people with the appreciation for the commitment, dedication, and go out there to fundraise are also tend to be the most successful.
I first heard about Republic because of Sahil. And I was on Clubhouse and I saw he ran this AMA room saying, oh, I'm raising 5 million. And I was amazed because I was in that room and it seemed like every person that came out said, I love you so much. I'm a first-time investor. Can I increase the cap? And I just thought, wow, you really have people who love you so much. And he raised it in 12 hours. And later on in my research, I realized that he was the first person who was trying out this new SEC change where they raised the cap from 1.06 million to 5. And he said he actually wasn't sure how much demand there would be. So I wonder, the behind the scenes, what was he doing? What were you doing to test the waters and see, can we raise that amount?
That's exactly it, Lynn, is that Sahil was out there talking about working his community. And he himself is a celebrity in his own right, but on Clubhouse, on social media, on Twitter, activating the community. And there was tremendous demand. The Gumroad campaign on Republic, the vast majority of investors came in through Sahil's network. We did not have to do a whole lot at Republic in terms of getting the work out because the founder had a huge community and put in so much work. That's why he closed $5 million in a single day in 12 hours. I mean, that's faster than a flight from New York to San Francisco, then rent a car and drive to Sand Hill Road and pitch Sequoia. You got to repeat that 20 times to get a check from Sequoia. Here's 12 hours, $5 million in the door. It's how powerful it can be. Not everyone can do it, but everyone can do it to some degree. And yeah, it's all about community building. And I think that notion of fairness currently is resonating. So any company that has a community, how can you not consider turning them into your fans and ambassadors?
Based on your experience, are there specific concrete steps you've observed that founders have done, you have done, that help to activate that community?
I think repetition, one email is never enough because people are busy. And so in a very clear, succinct way of communicating to them why you're doing this, how you're doing this, and when. And there's a whole playbook on you send out what email in advance, through a week later, send another confirmation email, another week later, send another email, even before the campaign has launched. And then after the campaign, like reaching out on customer service, or just being thoughtful about the process. But at the end of the day, it is fundraising from tens of thousands of people. So the methodology, think of it as like a whole marketing, go-to-market execution campaign. It's not just turning on the switch and sitting back and wait. And depending on how large and how small a community one has, the legwork that it would take to activate them may vary a great deal. We have, projects that raise millions of dollars, but only from a few hundred people rather than 5,000 or 10,000 because their network are all ultra high net worth and that they're willing to accept, $20,000, $50,000 investments are coming in. So it really depends on case by case, but the willingness and the repetition of doing so, I think it's just the two common traits.
I heard Sahil in this Clubhouse session with you and a US Congressman and Jason, and he was saying that not everyone can activate the way I do. I don't think Vlad of Robinhood could do it the way I did. But then also heard the CEO of Republic, Chuck Pettit, said that, most of our competitors specifically say we don't market their campaign, but we do it for you and with you. So I wonder for founders who can't do it the way that Sahil can, what kind of support can you lend them to help activate their community?
Yeah, so we help some in that we have a whole playbook. Sahil didn't need our help. He taught us many things, but we have our own playbook. One of our advisors is the woman who has raised the most in crowdfunding of any platform. She was raising on Indiegogo and Kickstarter. I think she's done over $10 million in a single solo female founder, Catherine Crook of Better Back. And so she gave us a whole playbook. And even if you follow everything there, you can sell a tea brand, even a phone case, for at least a couple $100,000. It may not be a millions, but there is a methodology on how to do this. And we definitely are very, very hands-on to those founders who are willing to do that. It's not the lack of knowledge, it's the lack of time and the readiness to follow our know-how. We also have a tremendously strong internal performance marketing team and design. And obviously we have our own newsletter, podcast. We do a lot to expose a campaign to our own growing community. The question always comes back to, mostly, not all the time, do the founders and the team have the bandwidth to execute on what we ask them to do?
If they don't have the bandwidth, would you say that is one of the main hallmarks of a failed campaign?
Yes, there's no question about it. Any failed campaign that has launched on Republic that I can think of, and that's less than 5%. Some are due to reasons completely unrelated to it because their business model has changed, factors that require them to end the campaign, or due to a misaligned expectation on time and commitment. Send out an email and they're like, how come that email, I send out that one email that you asked me to quench. It's like, no, I mean, even for the closest friend who fundraise on various campaigns, I usually miss the first 2 or 3 emails because I'm busy. And usually at midnight in bed, seeing the 5th email, I was like, oh God, I forgot to make that investment. So here it is. You know what I mean? It's not, so that resilience and that commitment is just needed.
Has COVID been one of the reasons for failed campaigns?
No, not directly. I think COVID affects all of us differently, psychologically, stress level, and bandwidth. But in terms of demand, we had grown steadily, if not exponentially, through the pandemic because people still want to deploy $50, $100 into things that they are hopeful that will be strong and profitable down the road, even if all things seems to be chaotic right now. For example, we all got to believe in like green energy at one point, right? And so if you see an idea that is so amazing, and yes, it's not going to be successful for another 3, 4 years, even if your stock portfolio had just gone down and the price of gold is like way, way down, if you can invest $20 in this idea, it gives you that hope and the possibility of making a profit down the road. So because of that, pandemic in terms of growth at Republic has not been affected.
And for those who are completely sold by the idea of raising from their biggest fans and community, I've noticed that there are other competitors as well, like WeFunders Start Engine. So what sets Republic apart from your competitors?
The industry is still very new. Very, very new. So it's actually a very friendly space. We all have our different lens and certainly different deal, meaning the deals you see on Republic, you won't see at that time on other platforms and vice versa. At the end of the day, people gotta pick for themselves which place they most connected with in terms of the deals presented and the overall ethos and mission and design and touch and feel. We definitely not for everyone. We definitely have received very large companies that want to raise on Republic, but they operate in adult entertainment or in firearm manufacturing or some other criteria. And we look at it and we're like, to make some money on this, but it's not for us. It's not what we, our team, and our community tend to believe in. So I'm just using that as an example that there are major differentiators. But more importantly, Republic is the only place where you come and you find a lot more than just binary startup investing. The game financing, real estate, crypto, I think we're the only platform that touches it. So in terms of providing the diversity of choices, I believe we're also unique in that sense in the US and outside. But again, it's very early on. So any of the other platforms' success is a success for the industry, and it translates into Republic's success as well.